Thank you very much, Dr. Duole, for joining us on the program. All right, tell us about the journey to repeal this old Karma law, what it took to replace it, and why it took so long to review. 30 years, that's a lot of time.
Well, the most important thing is that here we are now. Stakeholders have been trying to modernize the Act since 2004. A lot of people have given effort to this enterprise, but one thing or another, here we are. I can say that for the last 3 years, we've been working on this with the Corporate Affairs Commission, with the National Assembly, with a host of stakeholders, the Nigerian Bar Association Section of Business Law, NESG, even within government, the SEC, the Ministry of Justice, also the capital markets have been very active on this. There's something in it for everybody. We've pushed, of course, for small and medium-sized enterprises. So there are a lot of interventions to reduce costs, to ensure more transparency and better governance. There are also very sophisticated provisions that have really put our business climate where it should be globally.
So you'll have to talk to us about those sophisticated areas in this document. In what ways does the revised document specifically enhance the ease of doing business projections of the federal government?
Okay, let me start from the most innovative. I think one that people are probably most excited about is the fact that we now have a single member, single shareholder company. This is something that some other jurisdictions have gone ahead to do. Nigeria has thought it fit, because we're very entrepreneurial, we thought it fit that this is an innovation that this climate is ready for. So you can now incorporate a company by yourself. Another structural change in that regard is limited liability partnerships, limited partnerships. So you can have the benefits of a partnership also with the attractive elements of limited liability. So that's another thing. We've gone ahead to work on electronic meetings. So a lot of virtual meetings, virtual annual general meetings, once it's in the association, articles of association of the company. Very importantly, electronic transfer of shares. This speaks to netting provisions. We've been wanting a derivative market, debt derivative market here in Nigeria. So the SEC and the capital markets operators have been very excited about this. They really pushed hard for it, and we're glad that we're able to make it happen for them.
Now, how will this new Karma laws improve Nigeria's next ranking in the ease of doing business?
Well, there are a number of provisions that take us to where we need to be. There are provisions for insolvency, rescue provisions. We hadn't had that before as a business climate. So if any business has to fail, there are provisions to make sure that the business can fail with dignity, not have creditors cannibalize the business. So this is protection for businesses. You also have more protection for minority interest in a business. You have a situation in a private company where rather a public company, where the chairman and the CEO cannot be the same person. The chair has to be a different person. So a number of other issues like that, speaking to better governance. You can't be on more than 5 public companies as a director anymore, so transparency there. But I think for SMEs, what is most important is that we reduce the regulatory burden. You don't have to have a company secretary. You don't have to have an auditor. They are now optional. You also don't have to have a declaration of compliance, which was formerly signed by a lawyer and attested to by a notary public. Now the promoters of a company can have a statement of declaration, a statement of compliance by themselves. So those are some of the initiatives and the innovations that we put in there specifically for ease of doing business. But I must say that it's a huge legislation, the largest we have in Nigeria. We have about 869 sections in the new CAMA 2020 and 15 schedules, as opposed to 613 sections in the previous 1990 CAMA. So this bill this act has a lot in it. And yeah, it's just getting there and start looking at how the business climate is going to be revolutionized, just as it happened in 1990.
So what is your projection for Nigeria's ranking on the ease of doing business?
Well, it's hard to say. This year, the global cutoff deadline was in April, so minimal impact on this year, but next year we'll see the traction. I think for us, while we do work on rankings and the perception index, it's important to note for Nigeria that we're actually most concerned about the impact that we deliver for particularly small and medium-sized enterprises, which remain the engine of the economy, contributing just under 50% of GDP and employing over 80% of labor. So while we do work very hard at increasing our rankings, and we've moved up 39 places over the last 3 years, and we've been twice recognized as top 10 performers globally, our number one priority is making sure that the actual impact felt by the business climate and the recognition that the private sector feel that their demands have been listened to, and the government as a whole, that's the National Assembly. I must commend the 8th National Assembly and the 9th National Assembly for really demonstrating continuity in government and just making sure that this bill did not have to start from ground zero. Commending several agencies, like I said, at the executive level, and of course, private sector. So this is a testament to Nigeria working together for Nigeria.
Now, part of the concerns of investors in the new CAMA law is in Section 275, where independent directors are expected to have more than 30% stake in a company before qualifying for the position. Why the jump from around 0.01% stake? That's in practice to 30%.
So these are things that come out of lessons from global best practice. So the entire act, when you see a jump like that, we also have a similar jump, saving cost this time in the amount for registering a charge to now 0.35%, which takes that regime down 65% of cost. What it is that we've looked at global best practice and we've looked at the Nigerian climate. We've learned from example. We've learned from where there were insufficient tightening in corporate governance, and we've learned from that. So now we're at par with the best legislations across the world, and we're not going to stop here. It's not going to take Nigeria another 30 years. We're going to keep abreast with global best practices. And when you speak to the legal community, they will tell you that these protection, these measures are going to ensure that corporate governance is better in Nigeria. Less insider trading, less abuse of directors' responsibilities and fiduciary duties. You saw just last week the Institute of Directors launching an ethics code. This is something that is topical globally, and these provisions in the CAMA 2020 will ensure that Nigeria's market will be at par with the rest of the world.
Now, as for the section 404 of the CAMA, where provision is made for the equal number of independent directors with audit committee members, how does that balance the agent-principal relationship concept of corporate governance?
Well, thankfully I'm a lawyer, because this is not actually an ease of doing business question, but thankfully I'm a lecturer. I'm a senior lecturer at University of Lagos, and I did happen to teach company law back in the day. So what it is that you're looking for a situation where the voices in the room can balance whatever insider dealing can be going on. There's a reason why there's more independent directors being brought in to balance out shareholders, to balance out management, to make sure that even in an audit committee, which is where you have issues of financial accountability and looking at the books, the records, the accounts of the business, those are the places where you need independence, where you need rigor in the discussions of the company, because it's not at the very high level that these issues, it's not at the AGM that the books will be looked into. So you want to have the right people in the room to ask the right questions and the less probability for collusion. So they will be more independent, there will be more accountability and independent voices in the room.
And the Act also prohibits a person from being a director in more than 5 public companies. Does that permit an investor to further have holdings in more private companies?
Yes, of course, you can have holdings, but you wouldn't be a director. And we also have the provision where you have to declare your interests, so we can trace who is actually in control, who actually owns interests. So these are provisions that are put into the Act because of past experiences that we've seen in the market. We've seen situations where you trace money. Of course, it helps limit corruption. But apart from corruption, good governance, because you have situations where companies or individuals can hide behind the veil. So this kind of helps in the lifting of the veil. You can now trace who the actual beneficiaries are in every company. This helps to make sure that there's no layers, because company law can be very complex. People can have all sorts of special purpose vehicles, all sorts of companies offshore, all sorts of things to make sure that either they're dodging tax liability or they're not transparent with their business partners, or they're hiding secret profits. It could be a number of things. And these kinds of provisions will make sure that we minimize, we limit to the barest minimum such sharp practices in the Nigerian climate.
And we also see the introduction of statement of compliance in the Act. How significant is that clause?
Yeah, so what that does, I actually mentioned it earlier, it makes sure that a promoter can now basically issue a statement of just saying that I have complied with all the registration requirements. In the past, it had to be a declaration of compliance, which had to be prepared by a legal practitioner and attested to in the presence of a notary public. You can imagine the cost, the time associated with that. With a statement of compliance, a promoter, especially for SMEs, can simply make the statement and submit the statement of compliance. And then the onus is on, if anything happens later, then you're liable for falsifying your claims. But we're going to take the promoters at their word. And this is significant for small and medium-sized enterprises, not to have to bear those regulatory burdens of, at a very early stage, employing lawyers, employing accountants, employing tax, not to say that we're taking away business from professionals, because my legal colleagues would be upset with me in a second. But what it is that we're making work more sophisticated. So a lot of the bread and butter, very simplistic, I mean, a statement of, a declaration of compliance is really just a standard form, but private sector get charged for that. Here, statements of compliance, the private sector would have to make sure that they've met the requirements by themselves. And sometimes private sector do opt to still use professionals. It's actually optional now, but it can save cost, it can save time for private sector entrepreneurs that are more self-aware.
All right, Dr. Oduwole, just before I let you go, the Act introduces limited liability partnership, which encourages startups. How will this part of the Act help your office in promoting the establishment of more startups, especially now that the COVID-19 pandemic is rattling the economy?
Yeah, so the entire regime is directed at making sure that from ideation, people are able to very quickly, if I wake up at 4 a.m. and I have an idea, by 9 a.m. I should be able to have registered a company. So the reservation of business name is now electronic. We did that some years ago. And also the registration process. Now with things like electronic signatures, with things like e-meetings, not needing to have auditors, not needing to have company secretaries, limited liability partnerships, which is a choice of a structure. So you can have a single member company. You can have a limited liability, a partnership with limited liability. You can have regular more than 2, 3, 4, however many members you choose to. So we're giving more options to businesses. We're giving more options to promoters, a variety of options. So you can choose to have a limited partnership, a limited liability partnership, a single member company, or a more traditional company with several shareholders. So what we're doing is we're opening up the space so that people can move the way that is most comfortable to them. And the legal regime supports that.
Well, thank you very much for your time, Dr. Oduwole. We just hope that this new law would eventually bring more investment into the country and encourage startups to do their businesses here. Thank you very much for your time.